ready? You got me running. Shake it, baby. Raise your hands up. Raise them up.
Good morning, afternoon, or evening, depending on where you're watching this in the world, and welcome. It is the Currency Call presented by Forex Trading Asia, and it is the start of the week. It's Monday, the 14th of March. So we're already into mid-March as well. And I hope you all had a great weekend. There's plenty that will be discussed today. And just to start off with, we do have Kim Hong back, and he will be going through to start the call off with the Rba Monetary Policy Meeting Minutes that are coming out tomorrow morning at 8:30 a.m. GMT +8. Jin will be going through the Aussie and Kiwi pairs, and I'll also be touching upon the US dollar index and also some movements in the US two-year bond yield that are of interest that have just come out just recently as well. So a lot to discuss, but before we get into the details of the trade ideas and fundamental analysis, I will go through the risk disclaimer as well. Any information shared in this video is not intended to be a trade recommendation. It is solely the opinion and views of the speakers. So please remember to do your own analysis prior to entering any trades. And we are here to help as well if you want to ask any questions during the call or within the LCMS Trading Club platform as well. So we are definitely happy to help discuss trade ideas. And yes, there has been some movement with the Aussie dollar already. It's been an interesting session to start the week off in Asia as well, I have to say. But to get us started, we do have Kim Hong here, currency strategist with LCMS Traders, to discuss the upcoming monetary policy meeting minutes out of Australia. So over to you now, Kimmy.
Although the Aussie dollar is already moving, okay, we do have the Rba meeting minutes tomorrow. Unfortunately, okay, that minutes is unlikely going to cause, I would say, any big move coming in from the Australian dollars. Okay, why is that the case? So during the most recent meeting, okay, the RBA held interest rate unchanged, and they pretty much done nothing. Okay, but okay, fine. They did highlight a couple of points. Okay, first of all, in response to the Russian-Ukraine war, okay, they actually acknowledged that it's actually a major new source of uncertainty. Okay, not good. All right. And then RBA also highlighted that inflation in Australia, okay, actually picked up more quickly than the RBA has expected. Okay, which is actually, I would say, good. All right. I mean, given that last year the RBA was like inflation was quite stagnated, and it may take some time for inflation to pick up and things like that. Although not as aggressive as Jerome Powell's transitory inflation, okay, but the RBA was also quite, I would say, hold back quite a bit, not so confident in terms of a big rise in inflation, okay. But then in a way, they actually got a bit surprised, okay, given that inflation in Australia isn't really like soaring like US or UK or even some other major countries, okay, but it's still climbing. All right, it's still climbing, and it's faster than the central bank has expected. Okay, so in a way, the RBA was a bit surprised also. Okay, but I think this is a good surprise. All right, because as we all know, with the upwards pressure coming in from inflation, that will more or less push, okay, motivate any central bank, okay, any major central bank to hike rates in an attempt to tone down rising inflation. Okay, so yep, one of the points that they highlighted was that inflation in Australia picked up more quickly than they have expected. All right, and the last point, okay, that I find is quite major. Well, I think it's a bit not so positive, I would say. Okay, so they actually say that although inflation has been picking up, all right, it's too early. Okay, it's too early to conclude if inflation will actually be sustainable within this targeted range, within the targeted range of 2 to 3%. Okay, because it's only, I think, for the past maybe 2 or 3 months, or so, okay, that we actually see decent rise in inflation, okay, in Australia, all right, which is why the central bank is still a bit conservative, okay, it's still a bit adopting the wait and see approach, okay, in terms of inflation. I mean, after all, as compared to these 2 or 3 months, as compared to the US, probably 1 whole year, okay, of strong inflation is nothing, okay. So as of the most recent meeting, all right, all we know is that the RBA doesn't sound that convinced yet, okay, in terms of hiking interest rates, okay, because who knows, next few months, inflation may start to stagnate, may start to come down a bit, and then that probably prove the RBA's decision to be correct, to actually adopt a wait and see approach, right? So as of right now, yeah, we are still not, although we can expect 1 interest rate from the RBA, okay, probably towards the end of the 2022, okay, but as of now, it's still too early to conclude that any interest rate will be can be expected in the next quarter or 2, okay. So this time around, with the previous meeting not having any, I would say, constructive decisions being made, or any forward guidance, okay, useful forward guidance being provided, well, apart from inflation rising faster than expected, okay, we do not expect any surprises from the meeting minutes, okay. Nonetheless, okay, we still want to pay attention to see if they actually drop any surprises, okay. Any surprises as in, like, with this whole Russia-Ukraine war coming in, okay. I'm not sure, okay, if Australia will actually be impacted, but for countries like for countries in Europe, or maybe, yeah, mainly for countries like Europe and things like that, we may actually be seeing this phenomenon called stagflation, okay, meaning inflation is rising, but there's actually a stagnant economic growth, okay. So I'm not that sure if Australia may actually be having this issue, okay, which is why this is one of the things that I'll be paying attention to, okay, when it comes to the release minutes tomorrow, to see if this whole war that at the moment doesn't seem to be ending anytime soon, okay, will have a stagflation effect on the Australian economy, okay, which is what, yeah, some of the European countries are actually worrying about right now, okay. If it's not, then it's not that bad, okay. So, I mean, stagflation is one thing, okay. Another thing is that I think it was announced either yesterday or earlier today, okay, just a few hours ago, that Russia has actually engaged China to assist with military support. Okay, now this is a bit of a tricky issue, okay, and the US, okay, was pretty, I would say, prompt, okay, in terms of responding to this request by Russia to China, okay, saying that if China were to were to provide support and things like that, then they may actually the US may actually react, may actually respond, may actually react or respond to China's decision, okay. And the thing is that if China were to support Russia in terms of in terms of military support, okay, then it's going to get a bit messy around, okay, because you see, NATO is right now is trying to fix this whole issue, okay, and if China were to step in to help out, okay, then no doubt, okay, the Chinese yuan will definitely be impacted, okay, and we all know that the Chinese yuan is actually there's actually a correlation between the Chinese yuan and the Australian dollar, okay. So if China were to decide to help out, okay, to provide military support to Russia, then the country's currency, yuan, may actually be impacted negatively, okay. And if it's going to be impacted negatively, guess who's going to be impacted negatively as well, okay, the Australian dollar, okay. But it's still, I would say right now, it may still be a bit early, okay, although in terms of this whole war issue, things unfold very quickly, okay. But as of now, I think it's not like China is due to give an answer anytime today or things like that. At least it's not scheduled, okay. At least it's not scheduled. but still, if they were to actually respond to this, to Russia's request, okay, anytime soon, then yeah, we may actually be seeing movements in the Chinese yuan, and of course, the Australian dollar is likely, going to be impacted as well. All right. So I feel that in terms of price movement, okay, I only have two things in mind right now. Okay, one is the strong US CPI data, okay, that was being released. I think it was like 7.9% on an annual basis, okay, for headline inflation, which is very high, okay. And then another thing is pay attention to China's response to Russia's request of military support. Okay, these two factors over here will more likely cause a move in the Australian dollar rather than the Rba minutes that's going to be released tomorrow. Okay, but okay, if let's say the Rba minutes were to release some some useful information, okay, some constructive informations, okay, then I will definitely let you guys know and tell you guys like how it will actually impact on the Australian dollar, okay, and things like that. All right. So right now I will just pay attention to China's response, wait for the response to be out, and then trade based off the US CPI data. Okay. So any questions on tomorrow's Rba minutes? I would say today is probably the most boring, I would say, out of the 5 trading days for this week. Okay, because for the next few days, we're going to have tons of exciting stuff coming up. Okay, so if there's no questions for now, I will hand it over to Scott for his analysis on the DXY. Over to you, Scotty.
Thanks for that, Kiwi. And just to get things started, the US dollar index, we are still seeing it holding pretty strong as well. And that, I guess, is to be expected as we do have some pretty key events coming out later this week, very early Thursday morning. And we obviously will touch upon that closer to the release. We do have the FOMC meeting minutes, and we've got the meeting itself, and then we've got the projections coming out. So, and the rate decision, which we are, we were discussing before the call. It is likely it's going to be 25 basis points, but I shared an article just then in the trading floor chat for the LCMS Trading Club members about, it was out early this morning, the fourth negotiations took place between Ukraine and Russia, and it's the most positive yet. There could be some sort of window where we could quickly see things get much better, but I do doubt that, but it's looking like 25 basis points is probably going to be likely. So we've got 99.24 currently on the US dollar index, and we have seen the recent highs are being approached in, I think it was just over 40, 99.40. We've got resistance a little while away that was tested considerably a while ago. In fact, we've got to go to the weekly and you'll see where we've sort of come up to that. And that was back in mid 2020 in June. So, or even before that, in fact. So that's something to consider. We still have a little bit of room to push high here as well. From a news point of view for today and even tomorrow, I'll just go to that, and it's not that eventful. So we've got Monday, today the 14th. This is all GMT plus a time zone, and there's not much at all for the US. But like I did mention, it's sort of really, it's preparing for that Thursday morning release. We've got PPI out, expected 1% for month on month. That's what it was last month as well. And a little bit of retail sales data. But for today, what we could see, and just with the price action, very likely range bound is going to be the way. So even today, there's not a lot at all from a US news perspective. Something I did notice, so earlier this morning, we had the US bond yields open up, and I'll just bring that up now. So we've got it's at 1.79. So on the daily chart here, and I'll just make sure that I am sharing that, which I am. We've got it at 1.79, so it's actually spiked up. That could be to do with the developments in Ukraine with the continued bombardment, even though negotiations are going well, and that actually can be a slight positive. It doesn't seem to be following through. So that's going to be something to look out for. But currently, the bond market is definitely seeing that. So it's not showing here on the 5-day, but the recent highs were 1.758 on the 5-day chart. If we go out to the month, you can see that 1.8 is where we're currently at. And that's definitely a point of interest. So even the year to date, we haven't been near here. We've got to really go back to 2018 when we did start seeing interest rates getting increased. So we've got a little bit to go, really. We've got 2% or so, and then it really started ramping up. We had a recent high, that is 1.82. So that was in 2019 when things were sort of cooling down, but we still had risks of interest rates, and then it was held steady, and then we had COVID, obviously. So definitely something to look out for in the lead up to the news event as well. And equity markets have been pretty flat. In Australia, there's a public holiday in the eastern states for Labor Day, so not really much going on in markets. A little bit slow with volume. So that is it for the US dollar. Sideways until I think that release. So I'm not participating in a trade there on the US dollar index for now. And those are my thoughts. So we do have the Aussie and Kiwi with Jin now for any trade ideas. And I will hand it over to you now, Jin.
Thanks for that, Scotty. And as we started the session, everyone's already just said, right? The Aussie and the Kiwi has moved even just before the session. This morning, we've already seen the Aussie dollar. I'll just show you here. No, not this one. I'll show you here. The Aussie dollar already dropped that much over the last couple of H4 candles. We were talking about it on Thursday evening, saying that if it broke below this 7.3 level, we're going to see further downside at an interim all the way to that 0.7251, and then possibly further from this point onwards. But coming back to the fundamentals first, Kim Hong has already went through the monetary policy meeting minutes happening tomorrow at 8:30 a.m. But pay attention for the Aussie dollar and the Kiwi dollar. We're going to have quite a big Thursday morning at 5:45 a.m. GMT +8. On Thursday morning, we have the New Zealand GDP quarter-on-quarter number looking like a big swing from a minus 3.7% to a plus 3.2%. So GDP productions in the country picking up towards that 3.2%. Looking, if that does turn around that much from a minus 3.7 to a 3.2, we're going to see quite good upside for the New Zealand dollar there. But on Thursday, this is early Thursday morning, and then on Thursday morning, 8:30 a.m. GMT +8 again, Aussie employment number looking to go from a 12.9K this month to a 40.3K, and unemployment rate going from a 4.2 improving to a 4.1%. So looking like some good news potentially coming from the Aussie and the Kiwi dollar, but all that is being preempted before we have at 2 a.m. the US FOMC rates looking to go from a 0.25 to a 0.5%, so a 0.25% increase in terms of the US rates. And then we have to pay attention to the statement and also the projections and press conference. So I think we're going to see at this point on Thursday morning, early Thursday morning, is possibly the US dollar strength, as the guys have been sharing with you already. And then after that, we will see that rebound in terms of good economic data coming from New Zealand and also the Aussie. Thursday is going to be a big week, or big day, because we do have the Bank of England's rates decision as well at 8 p.m. We'll tell you more about the pound dollar on Wednesday. So with all that in mind, what could happen for the Aussie dollar? I caught a trade here as it broke that 7.3 level. But at this point now, I'm looking for it to break below, break below that. Oh, let me take that away. Break below that 7.2. I'll bring it a bit lower. 7.245 level. 7.245. If we can break below and close below that point, then we're going to see that downside move towards that 7.160 support level. So what you should be looking for here is selling opportunities below that 7.245. Stop loss very tight at about 30 pips. Take profit 60 to 70 pips. You're looking at a 1:2 risk reward ratio towards the downside. I would say at about 7.233 or 7.230 would be a good selling opportunity. Same thing as what happened here in late Feb, where it broke below that point and we saw that big downward move. It's consolidated here a couple of times, so breaking this level will be crucial to see that big downward move towards that 7.15 or 7.160 support level. So quite straightforward there for the Aussie dollar. Kiwi dollar a little bit different, right? It's failed to break higher. We were talking about it for it to hit that support and bounce off, looking for that buying opportunity. It failed to break higher. I'll take that away just to clean up the charts. At this point, I think that if the Aussie dollar does drop or does continue to drop, we could see it move further down, but I think that this will not be a good trading opportunity at this point because not a lot of move, not a lot of space towards that move. About a 45 pip move towards the downside. Your stop loss would be oops, let me take that away. Sorry. All right. Your stop loss would be about a 20 something pips, but it would be right in that middle of that zone. So I wouldn't be too keen on the New Zealand dollar on the H4 time frame there. If you wanted to trade this on H1, quite possible, but on the H4 time frame, I'd rather let it drop, wait for it to drop down, sell the Aussie instead, let the Kiwi drop, and at this point, at this 6740 level, wait for Thursday, wait for that good news. We might see that bounce back up, or it might bounce either at this 6740 level, or it might continue down, and as we see the US rates increase, it might drop all the way towards that 6677 level before we see a buying opportunity back up. So I'll rather wait for it to drop either to this first or second support level before looking for buying opportunities back up towards that 6842 or 6940 level. But I think that in this case, focus on the Aussie dollar first. Pay attention to possibly the pound dollar, the euro dollar. Kiwi can come later into the week on Thursday or even onto Friday, where we might see that bounce back up towards the nearest resistance level. But I think that with the FOMC preempting that news, we see further downside before that big upward move. The question there is, will Aussie retrace up to 7291 before coming back down again? Any possibility or higher probability straight down from now? All right, I'll bring back the Aussie chart. So at this point, I think that for that big bounce back up towards that 7291 level, again, quite possible, but I think that we're more likely to see it sit in this point, sit in a bit of a consolidation before breaking lower. I don't see any reason why it should be bouncing back up that significantly. I think that it might happen like what happened here, where you see it bounce around this level before breaking lower, like what happened here on the 24th of Feb. So not a big retracement expected, but I think that we might see it in consolidation before breaking below that support level. With that, I'll pass it back to you, Scotty.
Thanks very much for that, Jen. And again, thanks for the questions as well to the LCMS Trading Club members. And don't forget that we will be around in the club too to help out anybody that is looking for some clarification, or if you do see something that looks good on the charts, we are happy to help with giving some confirmation on whether it's a good trade or not. So thank you for watching, everybody. Hope to see everyone on tomorrow's call. Bye for now.